What's up, investors? It's the Russian dude, and today's stock market entire forward PE ratio is at its almost highest levels in a couple of decades, if not more, and the probability of a recession within the next 12 months has increased to 37.5%. So let's talk about why this is important, what it all means in today's short video. But long story short, according to this graph, as you can see right now, the forward PE ratio of the entire stock market right now is estimated at 22, which is way higher than historic forward PE ratio, which is approximately equals to 15. It is even higher than during the dot-com bubble, which was approximately at 21. It is also way higher than during greater financial crisis of 2007, 2008, 2009, when this number was mere average 15. So right now we're seeing the numbers which we have not yet seen in more than 160 years of the US stock market history. And these high numbers are also during the Fed pivot, whenever they're trying to ease the economic conditions, whenever they try to boost the economy, so even more money will go towards stock market, towards more technological, riskier investments, which according to the very basic economics 101 should theoretically boost the forward PE ratio even further, making the stock market even more overvalued. You can also see that these lines are either colored in blue or in red. And no, this is not related to Democrats or Republicans, no. The ones which are highlighted in blue, it means that the recession after the first Fed pivot did not occur within the next 12 months. And those which are highlighted in red, it means completely the opposite. It means whenever the Feds started their pivot within the next 12 months, there was a recession. So as you can see, it was pretty much in every single time since 2000s. The reason why 2024 is highlighted in dark blue or blue if you want to see it like this, because we don't know yet. The Fed pivot just started, so obviously there is not yet certainty whether the inflation will start or not. But according to, once again, this graph, these last 3 out of 8 times in the past, the recession indeed started, and every single one of these times the forward PE ratio was way higher than average, except the case in 1998. Which basically means that 3 out of 8 cases when the recession did start, it basically gives us a probability of 37.5% of a recession starting right now. What I mean by saying right now is that maybe the recession process has already started, because yes, recessions do not just come simply seemingly out of nowhere. There is a whole internal process which is brewing for several months or years, and then it just is looking for a trigger event which initiates the recession. So in case there is a trigger, which can be anything: US national debt, US student loans, maybe another housing crisis, because you already see how unaffordable housing right now is in the US. So we will never know. If people knew what's going to be exactly the trigger for the next recession, the government will obviously take all the measures possible to not let this happen. The recessions always come unexpected. But personally, if you've been watching some of my previous videos, I do see some very concerning signs, not just within the US stock market, but the US economy in general. So I do think that the probability of a recession within next 12 months is very well possible. And while recession might seem like a very scary word, don't forget that the recession is only just a big correction. Recession means that the stock market will decline approximately 20% or more. So it's not like that the entire US financial system is gonna collapse, though who knows, let's see. But yes, I personally do think we are due for a little bit stronger correction, what we already saw several months ago. The time will only tell, and I will be always here to update you guys on these daily events. So if you don't want to miss those videos in the future, please like this video, subscribe to my channel. Thanks so much for watching, and see you tomorrow.